Hi, welcome to the 10th edition of FINtastic Talks. And guys, again, as always, I'm very blessed to have all of you here, and I hope you're getting value from the talks today. Please make the talk very, very interactive. The talk is aimed at adding value to your life. So if you have any question, please do ask, or if you have, you're thinking about anything or any way we can contribute to your life, it'll be amazing. Today my theme of our topic is discipline. So we have probably got with us Mr. N Kannan from ICICI Prudential Life Insurance, and a person who's considered to be a master of discipline and practice. And we'll be exploring how important discipline and practice is in life and how it can add value to you. And how iPro is like a machine. The whole insurance industry looks up to them for their practices, their services, their innovation, and we'll deep dive into what makes the person behind it move and how he's been able to do that. And as I always say, okay, guys, wealth creation starts with you. So you must start your wealth creation journey, and you must learn about wealth creation. Wealth creation doesn't happen by chance, it happens by plan. So if you're an individual, we have a program called FINtastic. Please look it up. So it's called befintastic.com, and go and do that program. It offers a 100% cashback guarantee. And you must add that to your career so that you have a foundation knowledge where you can work with any wealth manager, create wealth, and nobody can misguide you. And but if you want to be a professional, then you must look at doing a certified financial planner program. International College of Financial Planning is a great option. So again, we want more and more professionals in this industry who are going to give high quality advice. And that's where people will understand the value of advice. I know people are talking about direct, but people don't show that how much people have lost also due to direct by being invested in the wrong funds or, taking wrong calls. When the markets were crashing, a lot of people did not put extra money in, or people got scared. So that's where behavior finance becomes very important, where your advisor has to play a part. So guys, let's together create wealth. And without further ado, let me invite Mr. N Kannan, who's with us today, to tell us about his journey at ICICI Prudential.
Thank you, Mr. Bajaj, for having me. Just to start off, thank you so much for the generous words about me as well as about our company. As you said, we are proud of the fact that in the last 20 years, we have created a great institution, and thank you for kind words. And I want to say, we'll talk about it later, but I want to say that that's happened because of partners like you. I want to acknowledge it upfront, and thank you very much for that. And second, I also want to say that it's a great platform you seem to have instituted, with getting so many of them and building a lot of momentum around such programs. And I know you won't believe it. Across the shores, I got some messages to say that I believe we are going to be chatting with Mr. Bajaj. So I think you have instituted a very good platform, and I hope it's a lot of value add to your customers. And already on the screen, I'm seeing lots of comments and salutations. So that shows the enthusiasm around the program. And thank you for inviting me for this. And I hope I'll be able to add value to you and your customers. Thank you very much.
It's a pleasure to have you. And, I have to also, as we are talking about, I have to say that ICICI Prudential is a company I really admire. And it's not only me, so it's a partnership also needs a good partner. So I think ICICI Prudential also has played, a tremendous role in our own ethos, our own thinking, our own way of where we have built up our business and the kind of quality. So I think it's been a very, very good mutual relationship. And today it's not only us, but the whole industry looks up to ICICI Prudential. So you have walked into a very difficult role with a very, very high expectations, although you had played some part here earlier also. And you have done a fantastic job. I think the share price has never been higher, and your investors are super happy with you. And every end when people are looking forward to a great journey on that. So let me just start with a little bit about yourself. Why don't you tell us about your childhood? What was it about your parents? Where did you come from, and how did you end up being a professional. So what defines N Kannan as a person?
Thank you for asking me this question. Just to trace my background, I am a normal small town South Indian middle class upbringing person. So I was born and I grew up in middle of Tamil Nadu, about 300 kilometers south of Chennai, to a middle class family. That has been my upbringing. Father was a government servant, and the early images about my dad is really he's taking a cycle, going and parking the cycle in the railway station, taking a train and go to his place of work, take another cycle from there to office. That has been his life. Went away from home at about 7:30 in the morning and reached home depending on the train timing at 9 o'clock in the night. That was my life. Schooling, you asked, largely I've been till 5th standard, I was in a municipal school there. And then later on from 6th standard to 10th standard, I was in a government school there. Then after 10th standard, people said that if you want to go further in life, you have to join a school with English medium, at least for your +2. That's what they said in the small town. So I joined the private school, their mission school, for 11th and 12th standard. Then after that, I studied at REC Tirchi, which is called NIT now, National Institute of Technology. So I did mechanical engineering there. So as you know, Mr. Bajaj, that time, you had to become either an engineer or a doctor. If neither engineer nor doctor, you ended up becoming chartered accountant. That was the universe of options which a family told you to do. So I ended up being a. So you asked about what the upbringing has been. I think what has really helped me to grow is a few family values at that time. One, clearly you had to work hard. I think that was a given. And whether you studied or played or whatever you did, you had to work hard. And as I said, my dad spent so many hours outside of our house working just to make sure that he took care of his parents who lived with us, his wife, my mother. And we had 3 brothers with an age group of +1, -3 kind of a difference in age group. And all of us were together going to college, school and everything. So he had to fend for all of us. So that was a difficult time, but he never, made us deprived of anything. That's the kind of feeling we got. So he used to say that study hard. That is the second one. Work hard and study hard. And he always used to tell me that I don't care what rank you get in school. For example, a mathematics exam before this. As long as you get 100%, I don't bother about your rank. That is a kind of ethos in terms of what one has to do. So absolute performance in education was always valued in the family. You talked about discipline. I think that was required. Morning, what to do. Afternoon, what to do. Evening, what to do. And that is something which was a regimented kind of a lifestyle, which it's a typical, all of us know a middle class South Indian lifestyle. And since we lived with our grandparents, elders have to be respected. And that is something which has been a core value which was imbibed in all of us. And finally, you had to be God-fearing because you do have, the family had a lot of belief and faith in God. So whether it's in the morning, doing your prayers, having your rituals, in the evening, doing the same thing. I think these are 4 or 5 things, discipline, hard work, study well, work very hard, respect elders, and you have to be God-fearing. I think these are some of the things which I felt that really helped me. Financially, I won't say we were extremely well off, but as I said, my father never made us believe that we were deprived of anything. So my focus, to answer your question, was really to get a good admission, study hard, get a good admission, and get to a job as quickly as possible because we wanted to just relieve the family of the burden. So, he managed to get me a loan from Canara Bank for my engineering. Then after that, the immediate objective was finish engineering, get a good job and repay the loan. That was the primary objective of passing out of engineering. So I guess, this is what really helped. And then I went to Delhi. I was in Surajpur, from Trichy to Surajpur. That was a big sort of culture change. And I was in a factory working in a mechanical engineering plant for about 3 years. And after some time, I decided the kind of life was so tough there. Going in Delhi winter from South Delhi to Surajpur beyond Noida, working every morning at Dadri, it was a little difficult. So I thought, and at the same time, I started developing. I joined as a management trainee, having done mechanical engineering. So I developed some interest in marketing and finance. So then, luckily for me, I got admission at IIM Bangalore. So then I went all the way from Delhi to IIM Bangalore, did 2 years of MBA. Then after that, sometimes people do change their lives. And a couple of influences for me have been good professors in finance, and I shifted totally from marketing to finance. And people told me that the best place to learn in finance is ICICI. So I joined ICICI in 91. And in fact, last month I completed 30 years in ICICI. So this has been the journey for me. And thank you. Thank you for asking this question. But I think, a lot of things one works for, but a lot of other things have to fall in place to get to where you are. And that is something beyond your control. I mean, I'm sure that you'll appreciate that. Certain things you work for, certain things come around automatically. Then the net product is an outcome of both these things. That's what I believe firmly.
And it's so amazing. I think we have known each other for such a long time, and we have talked about almost everything. And we have never talked about our childhood, our education, what it was all about.
Right.
And I think today you have inspired a lot of people that anything is possible, and education is your ticket out. So,
Yes.
this is something I like to say. Okay, look, anybody who feels I can grow in life or I can do better, you have one ticket which is called the golden ticket, which has been given to everybody, is called education.
Totally
and
agree.
and at the end of the day, it's all about practice, patience, being at the right place, getting the right education. And if you do that, you can achieve anything. Like I'm sure, Kannan, when you joined ICICI Bank, you wouldn't have ever imagined that one day you'll be the MD and CEO. So how was that journey? So many other people would have joined in. What do you think, enabled you to reach the top job, which a lot of people aspire for, are never able to get there? And one thing I have to say here is that, it is humbleness. And Rishi Narang has made a comment. Humbleness is ingrained in people like Kannan, and I also wanted to make that point. Okay, Kannan, I find, your humbleness inspirational. People who have achieved so much, done so much, and generally a lot of people get this arrogance. And one thing I have seen with all the CEOs, that they are all very humble. So, and just so when you talk about what made you succeed, also talk about this humbleness and how important it is in life to be able to reach in time. Do you have to be a type A personality person, fighting, aggressive, or do you need to be a humble? How do you, put it into your management style?
Yeah, I think good question. And first of all, I would like to thank Rishi Narang for that comment, and Mr. Ravi Shankar also has written something. Thank you so much for comments like this. See, what I feel though is, Mr. Bajaj, I think you have to be yourself. I think that is more important than trying to sort of mimic a humility or a mimic an aggression. One has to be natural in oneself. I think that to me is fundamental. As I said earlier, I was very lucky to have a family with a middle class upbringing and so on, so which made it possible, because that's the only way you sort of succeeded in whatever you did. So I think that was very critical, that one has to be oneself. And some people are very lucky to be born to such families with some value system which really help us to get through. So that is what I wanted to say. You also talked about different types of people. What also shapes your life later on is that you do see different types of people. You do see the ups and downs. You do see several cycles. That also shapes you to say that everything is transient. Something which is doing extremely well today may not do well tomorrow. So you just get life experiences which maybe at this age of 55, 56, I can appreciate it more than several youngsters watching us. But when you go through cycles, when you see lots of ups and downs, then automatically you sort of become mellowed down. I think that is the second aspect, apart from bringing, which sort of keeps you grounded to say that yes, good things can change, bad things can also change. So let us do that. And you also asked a question of my journey in ICICI. I think the ticket point you said, that is very critical. Ticket is about education. Ticket is also about doing a good work of whatever was given to you. I think these two I call the fundamental tickets. Yes, I totally agree with you that our parents made sure that we got educated. That is the first ticket. And the second ticket is that whatever came your way, I'm sure, you've been an entrepreneur. I never had the guts to become an entrepreneur. I'm just being frank with you. It requires a lot of guts and different approach. We are more of salaried employees, but whatever be it, I'm sure you'll appreciate with me that anything we take upon ourselves has to be done with a lot of hard work, a lot of mind and soul and heart to make sure that nobody can do better than how you do. That has to be an approach. I think that helps. And then somebody notices you and they give you more assignments. So like that has been my journey, that every 2 to 3 years, some new assignment is opening up and you do a good job on assignment, somebody notices you and then pushes you there. And apart from the ticket, people do ask this question. I think it's a valid question to say that, is it about hard work, automatically everybody can go up, or is it about luck? That, we have seen both the cases, isn't it? Some people, you may think that they are not extremely hardworking or they have not deserved what they have got, but suddenly you find them to be just by sheer luck, they reach somewhere which people wouldn't have imagined. Or some people who work very hard, brilliant people, intelligent people, and they don't reach what you would have thought them to reach. I think, here, I have only one thought, which I read recently from a book, to say that, it is like, somebody comes to a small town and says, us tomorrow morning at 7 o'clock, we are going to have an assembly in a biggest auditorium in the town. And you guys come there. The auditorium can accommodate probably 300 people. And we are going to distribute about 100 tokens of gift vouchers to 100 people. So now that is where I see that there's an interplay of hard work and the luck. So the hard work is that you'll have to go out, get up early in the morning, 6 o'clock, you have to reach the auditorium. You'll have to make sure that you are in the 300. Otherwise, the 301st person will not be able to enter the auditorium. That is completely in your hands. But when you go into the auditorium, whether you are 100 out of the 300, it's beyond you. But to say that, I won't even go there to be eligible in that 300, to be counted 100 among the 3, that part is a hard work. And yes, some other things, so it's a combination of this. And people like believers like me, I will not call it luck, I will say God's grace. But I think human effort combined with whether you call it luck or God's grace, depending on one's own outlook, I think these two are critical. And it's a success is about the joint probability of these two coming together is what I firmly feel. I mean, that has been the reason why, life has been very kind to me.
Yeah, I think you gave an answer. There, when somebody is listening to someone, what really came out for me was that you said taking responsibility for every work and doing it as if it was your own work. And I think this is what is one of the very important keys to the success. Right. As we talk about hard work and smart work, I see a lot of people do hard work. But what I've seen is that all the people who succeed are the people who work hard, but they also own a responsibility for what they do.
Right.
And at least this resonates with me at all. My reputation. People say Sanjiv is tough nut to negotiate with. But they also know that, look, once I take a responsibility, then it's not their responsibility. It's my commitment to them. It's my promise. And that is something that, then it becomes my team's nightmare that, look, we have to deliver on this. Absolutely. So I think this whole taking responsibility is very, very important. So
and also the other side of the coin is that if you make a mistake, just to own up the responsibility for the mistake. Maybe, you'll be wiser for having admitted and then moved on, and the learning you can take and then move on, rather than, blaming the mistake on somebody else and, attributing the success to yourself. That doesn't work in the long run.
Yeah, and I think a lot of students here today. So I'm getting a lot of questions from students, and I'm seeing, and they are all talking about whether building a career with Bajaj Capital or ICICI Prudential. Let me just answer it on behalf of both. You see, we are lucky to be both organizations. I think we are always hiring, and we are always growing. So you can apply to Bajaj Capital. There are a lot of opportunities with us, and I'm sure, and I know iPru, I'm sure also, whatever is the situation, is still hiring and growing. So I think it's also about ethics, like, a high ethical organization like iPru or us. I think I won't say we won't make mistakes, but we try to own up to our mistakes and we try to correct them, because it's all human. It's human to make a mistake. So we are always growing, and you always have an opportunity to come and work with us, and you can always apply. And I will request the team to put in the numbers for both the organizations if somebody wants to send in their resumes. So, Kannan, some words for the people who are looking to build a career with ICICI Prudential.
I fully resonate to what you said, Mr. Bajaj. So I feel that yes, ethics is the sort of bedrock of what we have built as an organization like yours. I think that is important. And for people who are applying also, I would say whether it is Bajaj or ICICI Pru Life or any organization, look for something which matches with your value system. I think that is very important to start with. Having said that, you're right that growing organizations like ours always hire good people. So that is there. So my sort of, since you said students, my own, 2 bits will be to say that, just like we say in markets that give time to the market and don't keep on, timing or getting out, getting in. The same thing, I'm a little bit old school when it comes to career. I would say that, give it time. You start and then you pick up an experience, and don't be compulsive job shifters every 2 to 3 years. That is what I would say. And when you choose the organization well, when you choose an organization with the right values, then you should give time for the career to blossom. That is the only additional point I would say, that, because in a growing organization, you will get a lot of opportunities to do various things, various assignments. So give it a little bit of time, be patient. And that's the first point I want to make. And the second point is that later on in career, people do get shifted around, or, you want to go somewhere else, or organization wants you to do certain jobs. So that time, what has always helped me is that I asked myself 2 questions. The first question is that, are you adding value to yourself in the new assignment? If you think that you are going to add value, stick on. And if you feel, are you feeling value by the organization? That's why you've been given this assignment. Then if your answer is yes, stick on. Otherwise, just move on. But initial phase of the career, I'll always say, give it time. Choose the organization well, but once the organization is good, give it time, have patience, and later on, be willing to take any responsibility as long as you add value to the organization and the job adds value to you. And that is the additional point I want to make, apart from agreeing with whatever you said.
Yeah, and I think brilliant answer, Kannan. I think it's a brilliant inputs you're giving, and if people, guys, if you follow that, it'll make a lot of difference. I'll add my own little bit 2 bits here. I tell the people, like, look, we have all grown up hearing the story of Mahabharat. Now, Mahabharat mein, who was the most ethical person? And people give various answers, but at the end of the day, it is Bhisham Pitama, who never made a mistake, or who always did the right thing in life, but he's not considered to be a hero of Mahabharat. And most of the people won't take his name because he was on the wrong side. So it is important to join the right organization. That organization that allows you to be honest, doesn't tell you to beg, borrow, steal. It tells you to, allows you to do the work ethically and responsibly and take ownership of that. So that is very, very important, that when you choose your organization, you have to see, okay, will this organization allow me to be ethical? If yes, then that's the 1% luck that you're looking at. If that organization is not going to allow you to be ethical, grow, learn, and as Kannan said, first 4, 5 years, 3 years, be very, very patient. So at the end of the day, it is the patience and commitment and ownership which will take you forward. So now coming to our next thing, where people are here about wealth building techniques and their long-term impact and wealth creation. So there's a question by Samir Santosh. He's saying, eager to know about wealth building techniques and its long-term impacts. So although this is a very broad question, but what would you like to say on this?
No, I would, being from the insurance industry, I will always say wealth has to be pursued. I will also add that the downside also has to be protected. Those are the 2 axes on which one has to plan one's life. So I will say that 2 things will never fail us in terms of, Samir's question. One, I think, is as long as we live, power of compounding will be there. I think that is something which you can simply take an Excel sheet and put 10% as the rate, 1 plus 0.1. You take exponential power of 30 years or 40 years. You cannot imagine what that will create from 1 rupee we invest today. So I think the first part is that the power of compounding is here to stay. and that is something which will work till such time we live. So that we'll have to leverage. I mean, that's what does it mean to us? That you also mentioned that there are several students here, job aspirants and so on. Start early. That is a key, key tenet for wealth building over a long term. Start early and be disciplined. You talked about discipline in terms of work and career. When it comes to money matters, you have to be even more disciplined. And that is something which we need to imbibe, that in a disciplined way save, and then in the disciplined way invest. Automatically wealth will get created. And you'll have to go to obviously good advisors and make sure that you listen to a good advisors and so on. But fundamentally, power of compounding will work. For that, one has to start early and one has to be disciplined. That's the first tip I would say. And also, there'll be a lot of cycles in life when we move on. There'll be market cycles, there'll be credit cycles and everything. So during these cycles, it's very important that we don't waver from our fundamental objective in terms of what we wanted to do in terms of wealth building. So then, if you go by some tips and here and there which are not well thought out, and if you deviate from the path of discipline and staying invested, then only God can help us. So I think this is the first sort of principle I'll say, that power of compounding works, and indeed it works. And I'm 56 years old. Please take it from me that indeed it works. And the second part I want to talk about is downside protection. That is where some of the products which are available in the market, like term insurance, really come into play, because life is very uncertain. While we want to create a particular wealth to your families, all of us want to do that. And that assumes that we'll be able to save X amount for Y number of years. But what if, God forbid, something happens, that we would still get to that same kitty, whether we are there or not. So there, probably, it's a good idea to have a downside protection in the form of, a term insurance or some product. So wealth, yes, through disciplined investment, and a downside protection through a term. These are the two things I would say, so that we can rest in peace and sort of sleep well every night. And ultimately, our objective when it comes to wealth creation should be, we should be able to sleep well every night. And that is the way I will sort of respond to this question. Thank you, Samir, for asking this question.
Yeah, I think very well answered. I don't need to add majorly more. And Samir, I have a philosophy, which is my TM, which I tell: play and learn. Learn and play. Okay, so what I say is that anything wealth creation building technique, most important is that you need to learn. Okay, don't enter anything blindly, or just don't do anything without understanding it. So you have to learn, spend some time learning, and then you play. And then you will always do well. Like, imagine you're going to play table tennis and you don't learn how to play table tennis, then you'll just be hitting the balls all over. You will not be able to play it. Similar happens with wealth management or wealth building. People want to create wealth, but they have no clue or idea. They reach to a person and says, "Yeah, meri wealth bana de." And then you're at the end of the day, nobody will do anything for you. So even when you go to a doctor, you have to understand at least what are your symptoms, what are the issues. So it is very important to learn. This wealth creation is a life skill. Okay, financial planning, wealth creation, you must learn about it, invest, how to invest, and then you start playing. And I would say that, look, build a mutual fund portfolio. Mutual funds are very easy way to understand, like, choose a good fund manager to manage money for you. And then obviously, as Kannan has said, you have to buy life insurance. And life insurance, start with a term insurance. And when you have more money and you want to do asset allocation, then you can, today life insurance companies also offer very good investment products which have very good guaranteed returns. So you can look at adding that as your wealth is growing. So at the end of the day, your portfolio needs to be a mixture of equity and debt. And in equity, you need to have a very clear-cut strategy amongst large caps, small cap, mid caps, so that you understand what is the risk on your portfolio. And also on your debt side, just don't be bank FDs. Look at other products beyond FDs like life insurances, investments, and be disciplined, as Kannan has said, that you have to buy some life insurance plans to be disciplined, because power of compounding. When I bought my policies about 15, 20 years ago, I thought, kab milega yaar. And today when, they have started maturing, then I can enjoy that money. So, it happens with everybody. So even you may have become very successful then, or you may have grown, but money is always important. So I think these are the small tidbits we can do. And then there is a lady called Anushka. She talks about that she's been here since February and first episode. And Anushka, thank you. You have always been there, and it's good that you are getting value from this. So next is also a question we get. There's a gentleman in his 30s. He's saying, now I want to start investing. What do I do? So how would you answer to him, Kannan? Although we have said that you have to start early, but what if a person hasn't started early and he's talking about, starting in his 30s? What would be your advice for him?
Yeah, I would again say that if we have not started earlier, I think it is Mr. Singh, Prashant Kumar Singh. Question is from him. So my thing is that it doesn't, for people who have not started earlier than 30, I would only say that it is never too late, because it is better that we start now and not think about the past. And then, without any waste of further time, we should start immediately. That's the first point I would say, that, it doesn't matter. 30, some people may start at 40, but it is better late than never. We should not postpone it further is the first point I would say. The second point I would say, Mr. Bajaj, I will say that you would be probably much more equipped in terms of advising them such situations. But my sense would be that the objective has to be very clear. If there is some specific objective one is looking for in terms of children's education, or children want to go abroad, or for family exigencies, maybe 10-year or 15-year or whatever time frame when you look at it, then sometimes the asset allocation also question becomes one of the time horizon implication also. So if it is like you said, if it is an extremely short term, some liquidity requirement is there, maybe extremely liquid a mutual fund may be an option. But if it doesn't matter, we can leave the funds for a much longer time in a disciplined way. Maybe a guaranteed insurance plan may really help. And with the 13 in the 30s, if somebody is there will always be some dependence on that person. Dependence will be just starting. So it's good to buy a term plan, because why I say term plan is just like power of compounding the savings side. Term plan, as we know, is a level premium for life, and the premium depends on the entry age. So if a person is going to start at 40, assuming that the insurance is available, then the premium is always going to be higher, and that gets fixed for life, balanced life. And if you start at 30, again the premium will be lower, but the same amount has to be given only for a longer period of time. So earlier, level premium is a great concept just like a power of compounding on savings. The level premium works to the advantage of the consumers. So if the dependents are there, one term plan definitely I will advise. Then I look at the time horizon in terms of wealth creation requirement. Then accordingly, a mix of asset allocation can be there. I completely agree with Mr. Bajaj. I'm completely neutral to mutual funds or insurance. That is not the way. Everything depends on the liquidity requirement, time horizon, and if it's a very long-term horizon, equity really works. If it's a shorter horizon, equity may not work, because when you want the money, we don't. In a short-term, equity markets can be volatile, but the long-term really power of compounding really works in the equity markets, even more powerfully than debt instruments in the long term. So I would say that ask these 3-4 questions on when do I need the money, how much do I require, then choose. But in any case, choose a term plan is what I would say, because dependence would have just started, started to happen for a person in the 30s. Some dependence would be there in the family. That's the way I would say.
Yeah. So since we are talking about term plans, Kannan, I need to ask you this question, and we must clarify it to our audience, because I have very firm views. When we started about insurance, and when most of these financial planning books were written about, long ago, that time, the life insurance was available till the age of 60 or 65 or maximum 70. Right. And most of these books, since the products were only available till 60, 65, the low cost term products, used to recommend, look, you have responsibilities till the age of 60, 65. And you should buy an insurance till only 60, 65. And I still see some financial advisors telling people, oh, don't go for a long-term plan. You don't need insurance beyond 60. Whereas today you have plans with coverage up to the age 85 or even 99 years old.
Yeah,
which are whole life for legacy planning plans. So what is your advice to people on this? Because I think this is somewhere, people are highly misguided. I have my firm view. And, what is your view on this?
My view is that, as long as it is available, one should take. Because, who knows whether we'll be denied insurance at some point in time. Who knows how our health situation is going to be? Those things are non-controllables. Yes, we will take all normal precautions in terms of our lifestyle, but beyond that, who knows? So my fundamental objective will be that if a longer term is available, you'll have to just look at whether you can afford to pay the annual premiums. If you're not able to afford to pay, take a lesser amount. But the longer the period is better is fundamental advice I would give in this context. I don't know if your view is different from mine, but I would say longer the available, just pick it up. That is the way
my view is absolutely the same. And this is where, please guys, I think this is the biggest value our viewers can get today. Please buy life insurance to the longest possible term. See, look, if you have a 99 policy till 99 years age, only 2% of the people or 3% of the people will live to 99. So that means 97, 98% people will get their claim. And today, look, a lot of people in India want to give a legacy to their family. So their poor parents are holding on to 50 lakhs, 1 crore or some properties. कि मैंने अपने बच्चे को, I want to give him 2 crore rupees or I want to give him 1 crore rupees or whatever, maybe a bigger amount. Now, point is, if you have bought him a 2 crore insurance, why would you need to hold back on your own money or assets? You can give it to him. And whenever something happens to you, your child gets that. And please understand, your wife will always be dependent on you. You will always have some or other dependent who will be dependent on you. So it's always buy life insurance cover to the longest possible term, provided you can afford it, and pay the premium only till the age of 60, 65. So I will say buy a limited PPT, but a long period. So, I don't agree with this concept that, you buy insurance till 60, 65. It's absolutely wrong. It's a missell. Okay, you only do that because if you're covering a specific risk, like you're buying a house, you want to cover the home loan, then you buy for the term of the loan, provided you have a proper life insurance cover. Otherwise, I will say first buy a proper life insurance cover, and that will only cover your home loan. So you don't even need to buy a home loan cover separately. So it is very, very important, for doing that. Also, Kannan, this is a question we always get, that a lot of people say, okay, look, you have investment products which are good, and the team has already picked it up before even I said Mr. Jain's name. People beyond 60 are looking to buy investment-based life insurance products because they understand the power of value, and the insurance companies don't have too many products. So this is more question for you. Where our viewers have been demanding that, age at entry should be till 75 for at least investment-based product, which cover only 10 times of premium. And what are the product options for people beyond 60?
No, the only worry is that, Mr. Bajaj, at that age, the mortality charges can be very high. If somebody is looking for an investment type of product at that point in time, with that age group, that may sometimes run counter to the investment objectives because of the mortality charges. That's the only thing I would say that which may come in the way of creating wealth by subtracting the mortality charges. So the higher the entry age, the mortality charges goes up, assuming the insurance is available. That's the only thing. But again, if you are looking at that kind of a thing, where wealth being created, one can look at the time of entry itself, maybe 50 years old, still a person is not retired, maybe 10 years to go. So you could look at a deferred annuity as an example, because if you look at a deferred annuity and then start buying it when you're 50 or 55, and then you don't require the money really for the next 7-8 years, because you would continue to be working and getting a salary, or wherever you are productively, you will be gainfully employed. After that, the annuity comes for life, irrespective of the life period. So some of the plans, like a guaranteed pension plan or something, could be looked at for that age group, so that for rest of the life the pension will be available in the form of annuity. So those are some of the ways in which you can do. The problem is that if you really start off saying that wealth is the only objective, and say that I'm going to enter beyond 60, 65, then it becomes a little of a mortality, and what for you're doing gets confusion at that time. Are you looking for wealth? Are you looking for legacy planning? Give some money to my dependents when I die. So those confusions start coming in. So I would say that 50 plus onwards, one can look at deferred annuity. Maybe 60, closer to 60, can look at the immediate annuity. Those are the type of things I would suggest, rather than getting into a mortality charges at that point in time.
Yeah, I fully agree with you. See, you have to keep the mortality charges in mind. And also, as Bajaj Capital, we have started a retirement planning service, which is a proper retirement financial planning based type of a service where a proper retirement plan is made. And right now, we offer it free to our customers or anybody, or like even if this is a offer to everybody here. So please, if you are above 55, please get your retirement plan made. It is not only simply about just how much money you need to invest to build a corpus. There are many, many more this thing, and it is how you will invest money, how many years you need to make it last. If you're doing a debt mutual fund or a ULIP, what is the kind of systematic withdrawal plans that you require? So it is a very beautiful product. So please do take time to use that product. I think you will get a great value in that. And a lot of youngsters complain, "Ki, like, why don't you have a product like that for younger people?" We have a comprehensive financial planning, but let me say that the retirement plan is very, very good. So Kannan, also next question which we get very often, Madhusudan is a very one of the very regular viewers, and he always asks some very tough questions. He's saying, is wealth building really possible for by insurance? Is it not just a risk covered product? More protection products like term insurance or investing, or segregate investing and insurance, and why bundle? So this is a question that comes, and we love to take tough questions. So Madhu will take your question.
No, no problem at all. Madhu, I think it's a question. Good that you brought it up, Madhu, because this is something which is always at the back of everybody's mind. So let me start off by saying that the investment horizon is extremely critical to start with. If somebody is looking for liquidity, and especially in the short term, 6-7 years, up to that, I would also encourage people to go and buy a mutual fund. We should not, just for the sake of selling. I'm sure Bajaj's ethos and value systems are also very similar, to look at what is the customer's requirement and then advise a product accordingly. So I would say that if it is going to be a short term or even a medium term of 6 to 7 years, if you look at the charges and if you look at the tax and so on, probably a mutual fund may make more sense than going for insurance if you are looking at the saving space. Now, to your question, so that way, a horizon is very important. The where we sort of figure it and segregating the investing and insurance, why not? I mean, absolutely no issues, and one has to look at the wealth plan separately and look at my wealth building. And I said, as I said in my opening remarks, that one has to be very clear on wealth building objective, which is a higher order need, and a downside protection objective, which is the basic need. If you segregate it in the mind, obviously you can get a term plan to take care of your downside protection and enjoy the upside in the form of wealth. Now, having said that, let me answer why we have come to this situation. Traditionally, in insurance in the country, as you know, from 1954 or 55, LIC has been operating. Traditionally, savings has been made equal to insurance, because the whole objective was that India was a saving economy. People were saving, and the objective was to make them disciplined in terms of giving money every month or every year, and then use the power of compounding and deliver some big kitty, which became effectively an insurance. And the money back plans and everything came in because of that. So in a way, culturally and traditionally, it got bundled into a product of a saving equal to insurance. That is how it has sort of evolved in the country. Now, as the country becomes wealthier and our per capita incomes increase, now there is a increased thing of wealth building and downside protection, and that is where I don't think there is anything wrong. Every country goes through this phase and evolves, and as the aspirations go up, as the per capita income goes up, then it is a good time to segregate and look at the downside protection separately and the wealth building separately. And to answer your question, should it be bundled? It really depends. If somebody says that, okay, if I'm going to be investing some money and then take a little bit of mortality charges from that and then give me an insurance, and the product, the good thing about bundling is that if as a customer I am starting to save every year X amount, and then say that I'm doing it because of a goal building of Y kitty at the end of, let's say, 15 years, whether I'm there or not, that Y kitty is available. That is a powerful part about combining these two. Because if something happens to me and I'm not able to save, and I go away, and still for my family, Y is available, they don't have to wait for 10 years, they don't have to wait for me to earn. I think that is where the bundling becomes very powerful. Otherwise, I have no qualms about separating. We should be very clear on what we want to do. On that basis, you'll have to buy a product rather than just buying it because everybody else is buying it without understanding our own requirement. So there are benefits of bundling, which makes it discipline, which makes the goal-based saving possible, irrespective of whether the breadwinner is there to save or not. That's an advantage. But if you have achieved a particular level and say that I am happy to segregate these two, absolutely no problem. I think that is also a good way of financial planning. So I will just look at it as a customer's requirement and leave the choice to the customer.
Yeah, I think very well answered, Kannan. I can't add much more. See, a product there's no wrong product. It may be wrong for you. Because you have to buy a product which is right for you. Let's take an example of a person who only has 3,000 rupees savings. Now he cannot afford to buy anything else. So what should he be the first product he buys? And he needs to have discipline in life. Only then he will in 15, 20 years build a corpus. So believe me, if he buys a mutual fund, he will not keep investing. One, because he knows there is a lot of flexibility. And the moment he sees 20, 30, 40,000 in his account, he's going to go out and spend it. Okay, so point is that for that type of a person who can't debundle insurance and investment, an insurance plan is amazing. But for a person who's earning, whose surplus is maybe 5 lakh rupees a month or maybe 1 lakh rupees a month, he can debundle investment and insurance. And even in insurance today, we have plans called guaranteed return plans or the non-par plans. So these non-par plans are giving a 5.5 to 6% guarantee. Now, point is you have a corpus. Point is that why would you keep that money in a bank FD? Okay, where you are getting today 4 to 5%. If you can get a 5 to 6% guarantee for the next 15, 20 years,
and the tax benefit also.
And the tax benefit, and I know 5% doesn't look attractive today. And you'll say, no, I can get higher. But you don't know what's going to happen after 10, 15 years. Like I have a plan called from LIC called Jeevan Suraksha, which at that time was giving a 12% guaranteed for the rest of the life. Okay? So point is that that time the interest rates were 14% and people used to tell me, are you foolish? Why would you buy this product? Aap to khud hi financial planner ho. I said, no, I believe in this product. And today, you can't imagine the kind of power of compounding it's giving to me. Today, typical hota hai ki if you buy an insurance product, 1 lakh, you get 2 lakh rupees of income. There I'm paying, I think, a small amount of money and I'm getting 10 times of that as my income. That's the power of compounding when you're buying a 30-year plan where the government is supposed to give me a guarantee for 30 years. Of 12%, and after that for the rest of my annuity is also at 12%. So at that time people used to say debundle karo, but jo debundle kiye today they are getting 4% on debt. I am getting 12% on my investment. So look, it may look foolish today, but these are long-term decisions, and guaranteed or the non-par plans which are available today, I have to tell everybody, guys, they have to be a part of your portfolio from your debt allocation part. And they are amazing. They are very, very good products to have, and you must add those products to your portfolio. So, Kannan, let me take one question on product. What is the most product from the IPRU's table? We have talked about term. Other than term, which is a product that you are most proud of that you would like to tell people about?
Yeah, we had talked about the term already. So a couple of products which we introduced recently, which I'm sure you would also be looking at selling to the appropriate needs of the customers. I mentioned it a little bit as a response to the earlier question. The guaranteed pension product we are extremely proud of, because we thought that through this deferred annuity scheme, we can attract the customer segment who are in 50, 55 years old, because they will still have 5 to 10 years to retire. And they may still continue to get salary during this period. At that time, they may not require pension. But by keeping it invested with us, and then after that, drawing the pension after 5 years or 10 years, lifelong, that we thought was a good, powerful proposition. And I'm happy to say on this platform that this also got the Product of the Year award, which is quite a proud moment for all of us. And here we also added that why should we be looking at joint life as just the spouse? Let us look at other relationships also. It need not be spouse alone. Look at some other relationship of dependence as a joint life. So thereby, for them, it could be a payout in the event of the death of the annuitant. That is one product. The second is, of course, you rightly said, not just the return, but guaranteed return. But also, especially in this uncertain environment, guaranteed return becomes even more of a important thing to have in your portfolio. So in that context, we had this product called Gift, as you know. That is something which we are proud of. We also added some bells and whistles there in the form of saying that why should it be on a particular date certain only? Look at any goal in terms of the easy to remember date. It could be a school fee payment date for the children, or it could be a wedding anniversary, or it could just be a spouse's birthday, or whatever you want to do. You choose the date, and then from the perspective of the payouts. So Gift and GPP are the two products I would say I'm very proud of. You talked about the iProtect Smart. There, what we are proud of is just adding a critical illness, which is a guaranteed premium for 30 years. And that is something, a lot of companies have the renewability clause, whereas here it becomes sort of fixed premium for 30 years. So these are some of the things we are proud of. And finally, I hope it becomes a reality very soon. IRDA, as introduced sandbox regulations. And there they said they gave us the power to experiment in a controlled environment. They asked all the companies to put in products for approval or processes. There, I'm happy to say that out of 7 products in the first round approved for life insurance companies, 5 products and processes of ICICI Prudential. That is something which we are extremely proud of. We are awaiting the final approval. These are around savings plans, customer loyalty points, or wellness-oriented products. So if we get the final approval, that will be something which we'll be proud of in terms of rolling out. So these are some of the things I would say in the context of what we are proud of in the product domain.
Yeah, wow, Mother, that's amazing. And Kannan, I need to have a separate call on you on that, because we can see a lot of inspirational things coming out of iPro. And also there's a lot of questions we are getting on health insurance. Anushka is asking a question that my company's given me 5 lakh cover, and I don't think COVID it's shown to me that it's not enough. So Anushka Sahu has put a very interesting question. So Anushka, I will answer it a little bit, then I will let Kannan answer. So look, 5 lakh cover today, guys, is not enough. And I would like everybody to put in the comments that what do you think is an adequate health cover for your family? Okay, so please put, I want everybody to put in the amount they feel is right. Let's make this chat interactive. And, I can't see the answers coming in. But, today I'll say that today any family needs minimum 20 to 50 lakh rupee cover. Okay, and that is very, very important. And Anushka, one is that if you can afford it, buy a private cover so that tomorrow if you leave the company or you move on, your cover doesn't stop. Okay, but another second thing you can do is, if your affordability is less, is that what you can do is you can buy a super top-up, which is that beyond 5 lakh rupees, you buy a policy which will cover you from 5 lakh to maybe 50 lakhs. And these are very cheap. So they'll be 2,000, 3,000, 4,000 rupees. And it will give you a protection, especially at the time of Corona, and things like this can happen. So it is important. Kannan, what would you like to say? I know health insurance isn't our topic of the day, but now even IRDA wants life insurers to play a bigger role in health insurance. And this is the need of the hour for the people.
Yeah, I would echo your sentiment completely. I would tell Anushka that the health inflation is probably higher than the overall inflation. And that is how it is going to stay. So we have to protect ourselves against the unforeseen or foreseen health expenses. 5 lakhs to me looks to be too small compared to what one can encounter. So I would separate it into two, and I would say that all the employees also should talk to their HR teams to figure out what is the term cover, group term cover, as well as the health cover. I think both will have to be very significant amounts. The good thing is that a lot of big companies have been talking to us. Amidst this pandemic especially, they've been trying to increase the coverage for their employees. I think the realization is coming through, Mr. Bajaj, slowly. A lot of responsible companies are in the process of increasing the covers. That is something which I would strongly advise people to talk to their HR. This looks to be a small amount. Of course, we will be able to give only the group term cover as an industry. Health will be largely in the general insurance domain. But if it is not still available, I would agree with Mr. Bajaj that we should add a top-up or separate health cover outside on a personal basis. It is really worth it, is what I feel. Only additional point I can say is that maybe you could consider, Anushka, looking at some critical illness, rider or a cover also, because sometimes more than normal expenditure, if someone is afflicted with a critical illness, then the amounts can be enormous. See, the problem is, I talked about annuity and all that. With due respect to those products, nowadays what is going to be important is not living for long. That will happen irrespective. But living well for long, I think that is the challenge for all of us, because yes, we will take care of our own physical health. That is very important. But God forbid, if you are impacted with some disease, how do we live well by managing that condition? That becomes even more critical. So numbers, as you quoted, they look very small. You need to look at top up or some other policy or a critical illness cover, or even talking to the HR and requesting them to extend the cover, group term as well as group health insurance, for a much higher amount. That's what I would say.
Yeah. So Anushka, and my belief here is that group term, say, it's always better to have your own term plan, because that's a long-term thing you'll carry and longest age possible. And as Kannan had said, that's got a flat premium. So the younger you add in, you go get into a group term, the cheaper it is going to be for you. Okay, and then Mr. PK Mathur asked that question, that what should be the minimum insurance cover for medical expenses. And I can see today, at least I'm happier at the answers. It's all about between 20 lakh to 1 crore rupees or a 15 lakh. Earlier, we used to get an answer of 3 crore, 3 lakh or 5 lakhs. So guys, 3 lakh, 5 lakh is not enough. You have to look at minimum 20 lakh rupees is my minimum. And it also depends on the affordability. Some person has mentioned that don't look at the life insurance premium, health insurance premium only as of today. It is what is the premium you can sustain. But there is also an option that, beyond 60 years of age, if you feel the premium is getting very expensive, you can reduce the sum assured a little bit also, because by that time you could have built up a saving corpus for doing this thing. And it's always important, if the affordability is an issue, then you can buy a 20 lakh cover and then buy a critical illness rider, which comes with most of the health insurance, that for these 30 critical illnesses, which covers most of the cases, if the amount goes beyond that, then you can use the critical illness. Kannan, what are your views on this?
Yeah, I would completely endorse it. The 30 critical illnesses, which will cover bulk of the exigencies, is what I feel. Then the rest of it, one can probably do it with even savings. But at the bare minimum, critical illness rider or a critical illness cover through whatever means, that I think is very critical.
Yeah. So, and for everyone, look, guys, unless an affordability is an issue, it has to be minimum 15-20 lakh rupees. Even if you are at a higher age group, obviously, affordability has to be looked at. And health insurance is not a very easy product to buy. It's not a product you can simply compare and buy, because there are too many options, too many permutation combinations. What is your need? So as a Bajaj Capital, we offer a free service which we call insurance portfolio review or insurance planning. And this we started in the pandemic time, because we understood people didn't understand. So it takes us time, and I'll say that we have thousands of requests. So it is taking us 3-4 weeks to respond. But if you want, you can write to care@bajajcapital.com. We'll do a free plan for you. You can go and buy from anywhere you want, wherever you feel you'll get value. But we like to give you this thing. So as we come to the end of the time, I know, Kannan, you have some appointments and some commitments. What is one last message you'd like to share with our viewers today?
No, I would just integrate all this and come back to the topic, which you had outlined at the beginning of this session, that be it life or be it financial planning, discipline is the key. That's the only learning I have, which I can share with all of you. It has really worked for me in life as well as in my own financial planning. And luckily, we have lots of youngsters here who can probably start earlier than I did possibly in my life, in terms of both being disciplined in the way of life as well as in the way of financial planning. That cannot go wrong. That's the only message I would say. Be it in life or in financial planning, discipline is the key.
Yeah, thank you, Kannan. I think this is the most important point you have said. Please get your financial plan made and then follow it with the discipline. At the end of the day in life, discipline is very important. That's a takeaway from me also. There are a lot of places where I need to improve my own discipline.
All
And
of us.
all of
It's a
us.
journey. It's a journey. It's not a. It's a journey. Constantly learning journey. That's right.
Yeah, and guys, if you have any questions which we have not been able to take, please do write in the comment section. We'll try to share any question which is for both the organizations, and we'll try to give this thing. There is a code, QR code, where you can go and scan with your phone and you can put in your question. The team wants to use the technology to the maximum. So, if we have not been able to this thing, we will make sure that it gets, answered well. So, guys, thank you for being here, and thanks for keep watching our FINtastic Talks. It's a pleasure to have you, and it's a great honor to host you, Kannan. One last question, going which a lot of people are writing, and I have to ask you, is a lot of people are your shareholders. So they say, what would you like to give a message to your shareholders?
No, it's the same message I've been giving that our own objective is to expand our value of new business, which is what we have articulated to the shareholders. And we said we want to double our financial year 2019 value of new business in 4 years' time. So we are 2 years left in that journey. So the ask is around 28% per annum growth this year and next year. We believe that we can be on that path without having to change our aspiration. How we will achieve? We will look at our 4P strategy, which is in the public domain, which is a combination of premium growth, protection business growth, then persistency improvement. That is where I must compliment partners like yourself in really taking up the persistency of the organization, and the productivity improvement by way of improving the cost income ratios. These 4Ps we believe will directly contribute to expansion of our VNB, and we would aspire to double our financial year 2019 VNB by 2023 financial year, and that we believe that we are on that right path on that. That is the message I want to give. But again, beyond that also, I believe that this industry, not specifically talking about our company, be it savings or protection or retirement, there is a huge multi-decade opportunity. Not only that, India will grow as a country and the per capita incomes will grow, and we are also starting off with a very low penetration. These two aspects will make sure that it's a multi-decade opportunity. That's the message I want to leave with the shareholders. Thank you.
So that makes it an attractive investment option, Kannan.
Thank you.
Thank you.
Thank you so much. Thank you for having me. All of you stay safe and do well. Thank you.
Thank you.